Is real estate market mayhem coming very soon? Is housing bubble 2.0 danger ahead? We're going to find out. Hey everybody, JJ here. You're watching Bull to the Bust. It is April 3rd. It is Friday. Hope everyone had a good week. And most of all, hopefully everyone is staying well out there. Thank you for joining us here. So pretty big report today on the housing market. We've got some massive predictions and red flags ahead here. Today we're going to talk about mortgage lenders. They're preparing for the biggest wave of delinquencies in history. That's right, in history. These mortgage defaults could surge past 2008 levels when the housing bubble went burst. This is on the back of 10 million jobless claims in the last 2 weeks. We just talked about that in our last report. That number is likely to get worse here in the coming weeks. Also, something just happened with home inventory. What was it? We're going to talk about that. That's the number of homes for sale. This could be an enormous wealth transfer. Cash buyers will flourish. The wild card is going to be government intervention and rescue operations. How will they impact home prices, inventory, and the housing market in general? Let's get started. All right, let's begin right here. This is a Bloomberg article. Mortgage defaults could pile up at a pace that dwarfs 2008. All right, now here's the thing. We said at the beginning that government intervention is going to be the wild card. We don't know how big or how small the government may come in. The government may come in and regulate foreclosures. They could put a freeze on foreclosures. They could also put a freeze on evictions, which is going to hurt landlords. But if landlords don't have to worry about getting their home foreclosed, then landlords still may not get hurt that bad. But here's the thing, and here's what could cause a big tsunami of foreclosures and more homes coming onto the market. All right, right now, people that have been affected by the cerveza bug, they can ask to skip payments for as many as 180 days at a time on federally backed mortgages. Now, that's not all the mortgages, but it is a pretty big chunk of the real estate market, of the mortgage market. And they can do that to avoid penalties and avoid a hit to their credit score, but it's not a payment holiday. Eventually, they'll have to make it all up. So it's going to be added to the back of the loan. And depending how this goes, they could make all those payments come due after the 180 days. That means after 6 months, 180 days approximately, they may owe 6 months worth of mortgage payments at a time. Now, I find that that's going to be a very difficult thing for most homeowners to handle. So what I think is going to happen is they're going to come in and possibly regulate this and possibly have the additional balance from those missed payments added to the end of the loan. So therefore, just extending the loan out another 6 months. We'll have to see how it goes. Again, government intervention is the wild card. Nobody knows exactly how this is going to unfold, but this is what it looks like it's going to unwind as so far. As many as 30% of Americans with home loans, which is about 15 million households, could stop paying if the U.S. economy remains closed through the end of summer and beyond, according to Mark Zandi. He's the chief economist for Moody's Analytics. All right, that is huge. That is 30% of Americans, 15 million homes. And can you imagine what kind of bloodbath this would be if there wasn't these rescue operations where banks are going to freeze payments and put a moratorium on foreclosures? But here's the thing, it still could be a bloodbath even with the moratorium or freezes on foreclosures, because that balance does not go away. And if job losses continue, it doesn't matter how much delay gets put into these mortgage payments. Eventually something's got to give, because you have all the other expenses that go along with home ownership. And this could come crashing down very quickly. Now, here's what Susan Wachter said. She's a professional real estate and finance at the Wharton School of University of Pennsylvania. She said the following, quote, "The great financial crisis happened over a number of years. This is happening in a matter of months and in a matter of weeks." Let's also take a look at a chart here. This is out of the same Bloomberg article. Now we see back here 2007, 2008 as the financial crisis kicked off. We saw a surge in the delinquencies as a percent of mortgages was about 10% at the peak. So 10% of all mortgages became delinquent at that time, and that was considered a pretty major housing bust. Okay, it was the housing bubble. The bubble went bust. And it only took about 10% of the mortgages to default. Now imagine if we exceed the 10% this time, and how much bigger this bust is going to be. It could be enormous. Again, it depends on what type of intervention we see. Right? Without intervention from the government and freezing mortgages and putting moratoriums in there, these defaults could be 15, 20, 30%, 40%, 50% of all mortgages. Nobody knows. And if you thought home prices fell a lot last time, imagine what could happen this time. For example, here in Southern California, San Diego specifically, we saw home prices drop in half in many areas. Many homes were selling for actually 50% of what they were selling for at the peak of the bubble. Now, of course, that's not true nationwide. There were many parts of the country where home prices did not rise that dramatically or that rapidly, so the downside wasn't as severe, but there were many other bubble markets similar to San Diego that saw huge run-ups and then huge declines after the bubble went pop. Now, regarding the government intervention, the freezing of foreclosures, a chief economist at LendingTree had the following to say, quote, "I expect policymakers to do whatever they can to hold the line on a financial crisis, and that means preventing foreclosures by any means necessary," unquote. So we could see a freeze up in the housing market, meaning home prices may not come down. If no one is getting their homes foreclosed, you're not going to see a big jump up in inventory, and therefore home prices may not come down. Because people, instead of selling their home and cutting their prices, they know that they're protected, they can't get foreclosed, and many people will choose to hunker down and keep a roof over their head versus even attempting to sell their home. So let's take a look at home inventory and see how things are unwinding so far. Now remember, it's only been a few weeks since the lockdowns really started in many of these areas. Next, let's take a look at Forbes.com here. This is a recent article here just out a couple days ago. In fact, yesterday, April 2nd. March data is in, and it's not good news for housing, but it's not what you'd think. So with all these job losses, you would think people would be rushing to sell their home, and that would be more homes on the market, more homes for sale, and the higher inventory leading to lower prices because you have more inventory, less demand, right? Wrong. Inventory actually declined. Instead of more people putting their homes on the market, people took their homes off the market, and this is for many reasons. One is you have the quarantines. Many people are not able or willing to go outside and tour homes. Also, many home sellers are frightened to have people come in and look at their homes because of the cerveza bug happening right now. So here it is. According to a report from Realtor.com, there are now 191,000 fewer homes for sale versus this time last year. Inventory as of March is down 15.7% compared to a year prior, March 2019, and even saw a larger dip towards the end of the month. So the trend is less inventory and not more inventory. In fact, in the week ending March 28th of 2020, the market saw a 34% slide in newly listed properties. The only major city that didn't see a decline in inventory was Minneapolis. And this pullback in homes for sale is what they're calling here a cautious approach, and it's becoming more apparent. According to a recent survey from HomeLight, 80% of real estate agents have seen seller activity drop in their regions. Nearly 2 out of 3 have seen sellers actually take their home off the market, and 75% say that the buyer interest has waned. So instead of a surging inventory, we could very likely see just a freeze up in the housing market, meaning homes are not being put up for sale, right? So sales may drop, and that's bad news if you're in the real estate business. So of course, real estate agents are going to see some problems with their paycheck and lower commissions because sales are dropping, but home prices not so much. Without more inventory and without people willing to go out and even look for homes, you're likely going to see a freeze up. Now, we'll have to see how this plays out. And I talked about this in my previous report that we could see a freeze up instead of a big decline in housing. Declining sales maybe, but declining prices maybe not so much. If everyone stays put and they freeze foreclosures, there's not much that can take place. I could be wrong, but I'd like to hear from you. What do you think with the intervention, the moratoriums, and the lower numbers of homes for sale on the market. Now, some people may say, hey, JJ, no, that's impossible. These banks, they can't stay solvent if people quit paying their mortgage payments. Now, come on. You know the Fed. They're going to come in. They're going to rescue the banks. You really think they're going to let the too big to fail banks fail? No, they're called too big to fail banks. Right? People could stop paying their mortgage payments for years, and it doesn't matter. The banks, they get whatever they want. Will we see home prices fall? You let me know. So that is what we wanted to point out here, that something just happened with inventory, but it was less inventory instead of more inventory. Ultimately, what I see in the housing market is an enormous wealth transfer where cash buyers will flourish and corporations and institutions will be the big buyers of homes if and when home prices do finally start to fall, which they will eventually. I don't think the government is going to keep everything frozen forever. All right, eventually we've got to get some glimpse of a free market. Exactly when that's going to happen and how long that's going to take, nobody knows. Because the government, again, they are the wild card. We don't know how heavy-handed they're going to come in and try to freeze up this economy. Okay, thanks for watching this update. Like to hear from you down in comments on this one. Hope everyone's well. Bye for now.